Over the past decade, Brazil's economy thrived on China's economic growth and rising commodity prices. Investors cashed in handsomely. The most commodity resource-rich country in the world, Brazil benefited from exporting commodities to China to feed demand for materials to build infrastructure. But China's growth is slowing as it morphs from an economy dependent on exports to one reliant on consumer spending. That's quelling China's appetite for commodities and hurting Brazil's growth. Brazil is projected to grow only 2.5% this year, down from nearly 6% in 2008. And investors are stampeding out. Investors yanked $916 million out of Brazilian bond funds through May 29th. The Brazilian stock market has fallen 7.5% this year, and its currency is trading near a 4-year low. As growth in China shifts into second gear and commodity prices fall, we're questioning the investing thesis for Brazil. Has Brazil lost its luster? Joining me now is Paul Attwood, Portfolio Manager of the Huntington Global Select Markets Fund and Huntington International Equity Fund. Paul, welcome back to the Wall Street Report. It's so good to see you.
Thank you. I appreciate it. Thanks for having me.
What do you say, Paul? I mean, given what looks to be a secular slowdown in China and falling commodity prices, has the investing thesis for Brazil changed?
Yeah, I think so. I think to some degree it has, at least on a shorter term or cyclical basis. China is responsible for roughly 17 to 18% of Brazil's exports. So this is a fairly substantial size. We know China is slowing down. Whether it's cyclical or secular, we don't yet know. But we know, obviously, the appetite for commodities has dropped fairly significantly. This has had a direct impact on Brazil's economy. First quarter GDP came in at 0.55% for Brazil. Expectations were for around 0.9%, so obviously underperformed fairly significantly. So until we see some stabilization in China and other areas of Southeast Asia, I think investors need to be a little bit cautious on Brazil.
Yeah, if Brazil can't rely on commodity exports, and it seems that tax cuts and spending on social programs isn't spurring consumer spending, does Brazil need a new growth model? Should investors expect sort of a new normal here for Brazil?
Yeah, I think so. I think the reliance on exports to other countries, particularly in the commodity space, I think those days may be coming to a close. At least, from the boom years they've had from, a decade ago. I think the new model has to incorporate things like infrastructure builds, domestic infrastructure builds, and also possibly a relaxing of some of the regulatory policies. It's very difficult to do business down in Brazil. I think if they start going in that direction, I think that'll help domestic consumption improve. Domestically, they have pretty good numbers. The unemployment rate is relatively low. The cost of standard of living has improved fairly dramatically. So they're making some correct moves, but I think they need to do a little bit more to spur some growth.
Yeah, they also are dealing with high inflation right now, right? So they're kind of caught between a rock and a hard place. My question to you is, what do they do? Do they raise rates now? Do they lower rates, right? Do they focus on growth versus inflation? And how does the U.S. Federal Reserve policy factor into that, right? We've seen a lot of hot money exit Brazil, a huge reversal from what we saw starting in 2010.
Yeah, all good questions. Inflation is approaching 7% in Brazil. This is largely driven by the fact that the Brazilian real since 2010 is down about 30%. And Brazil is an export nation, but they also are a very strong import nation too. So obviously, as their currency has gone down, the price of their import goods has gone up. This has caused fairly dramatic increase in inflation, which has a very negative effect on all consumers across the country. In terms of the Federal Reserve policy, if we believe the Federal Reserve is going to back off of QE, it will depend largely on how that affects the U.S. economy and how that indirectly affects Brazil. I'm not fully convinced that the Fed will back off just yet, but I think Brazil domestically has a lot of their own issues to deal with. And I think one of the things they have to do is stabilize their currency. The tax that they imposed back in 2010 on foreign bond purchases has now been removed. That may be step one, but I don't see international investors jumping back in until they see a stabilization in the real.
Yeah, be careful what you wish for, right? It might come true.
That's correct. difference.
Bit of a reversal there. You know, we talk about lower commodity prices, lower exports as a problem for Brazil, but is this really a negative for all of Latin America?
Some of the areas in Latin America that we are seeing that are doing relatively well, places like Mexico. Mexico has come a long way, probably in the most recent 2 to 5 years, I would say. Brazil is probably the most export-oriented country in Latin America, so they are reliant on global growth. As we all know, since 2002, 2007, 2008, global growth has slowed down dramatically, not only in the US, but also in Europe and also in Asia. That's had a direct impact on them.
Yeah, coming back to the U.S. Federal Reserve policy here for a second, obviously there's been some news out that it could unwind its purchases sooner than thought, and we've really seen investors dumping emerging market securities, whether it's bonds or equities. Are we at an inflection point here, depending on what the Fed does? Is it possible that emerging markets could be entering a period of underperformance?
Yeah, they certainly have, at least in the most recent period. And I think a lot of it has to do with the fact that, assuming the Fed does back off of QE, you would expect to see the US dollar rally, which means the other currencies would depreciate against the dollar. If you're a foreign investor in those areas, that's a big component of total return. Coming back to Brazil, we saw the real drop 7% in May alone, which is a very significant drop, especially if you're having a drop in equity prices. So it would have a direct impact. Whether one of the things you do have in the emerging markets is you have valuation on your side. The problem is you don't have the catalyst at the moment for those valuations to be unleashed. As the year progresses, if they stabilize and maybe we see a little bit of an uptick in the global economy, I think the performance will come back.
Paul, thanks so much for coming on the program and sharing your insight. I so appreciate it. Come back soon.
Thank you very much. I appreciate it.